Hi, welcome to today's video. Today's video is gonna be covering trading tips that I have noted down from my trading notebook. Just to help you guys. It's not gonna help. Essentially, it's not gonna make trading easier, but it'll make it less stressful. Because trading can get a little bit stressful sometimes, and noting some of the things that I'm about to tell you guys here will make it, a little bit less, or like make it easier to comprehend. So with that, let's get right into it. So some of the tips I do have, they all came from my trading journal. I feel like this is gonna be like a tips part 1 video. Just because I feel like there's a lot of tips I can share, but these are the ones that I have gathered from the first time looking at my trading journal. I feel like if I go over it again, I will be able to grab more tips, but these are the tips I do have as of right now. So the first one is, you want to always mark out the opening price of each hourly candle when intraday trading. So mark out the open of each candle, especially the 4-hour open. So as intraday scalpers, it is crucial to know what the price is. You would want to sell above any any opening price, the hourly opening price, the 4-hourly opening price. And because whenever we do trade as intraday traders, the 4-hour candle closes at 10 a.m. Eastern time and at 2 p.m. Eastern time. So that means there's 2 time windows where you can actually note out the 4-hour open. And you always want to be selling above the open, or you want to buy below the open. I got this idea when ICT says, he basically said, okay, you want to buy below the midnight open and you want to sell above the midnight open, and this is him applying it to the daily time frame. And then he also states, hey, instead of looking at the 4-hour time frame as just a 4-hour, how about you apply that apply the thinking that hourly or that midnight open, but you apply that to the 4-hour time frame. So basically you view every single 4-hour candle as a daily candle. So he doesn't really state this in any of his videos. I feel like he spaced them out here just so you can come into conclusion of this very concept right here. So you want to buy, like I said, I'm gonna say it again. You want to buy below the open and you want to sell above the open. And my second point, or my second tip for you guys is, after a big expensive session or day or week, you want to anticipate for the next session, day or week, or whatever time frame you're referring to be either consolidation or retracement, because prices isn't always going to go straight up or straight down, right? It's got to be efficient. So there will be inefficiencies that prices wants to retrace back into, or the consolidation. So yeah, that is my second tip. So after a big expensive move, you can anticipate either consolidation or some sort of retracement into a fair value gap, and that's all fractal. Number 3, new day opening gap and new week opening gap should be treated as a fair value gap. Or sorry, should not be treated as a fair value gap, but used in confluence with trade structure. Check June 18th, 2024 trade recap, for example. So let's check that out. Actually 6/12. Wait, was that 12? Was it? It's 18. I'm getting too old. Okay, so June 18th. What I mean by you want to align new day opening gap or new week opening gap with existing trade structure is here. So we're bearish for this trade. I'm taking this trade based off of the 30-minute power of 3 here. We created this 30-minute power of 3 because we traced back into a 30-minute fair value gap, right? So with that in mind, I can anticipate for us to take out 30-minute low, and we also have Asia's lows that we haven't taken out yet. And you can see it from here. So we haven't taken out Asia lows yet, and it also aligns with the 15-minute power of 3. So you want to go into the lower time frames to see if there's any supporting fair value gaps for that idea. So we have a 5-minute fair value gap, and notice how there's a new day opening gap that goes straight through the 5-minute fair value gap. You know, this is it's not like you want to sell every time we go into a new day opening gap, but whenever there's trade structure that aligns with or whenever there is a new day opening gap or a new week opening gap that aligns with trade structure, this is like extra confluence. So instead of taking your trade at the 5-minute fair value gap low, you can actually mitigate risk and have it at the new day opening gap low or new day opening gaps set consequent encroachment, but just so you can mitigate risk. And I actually entered here not at the 5-minute low here, but at the new day opening gap low, because it's still within the 5-minute fair value gap. So that's what I mean by the third tip here. So the fourth tip I do have for you guys is, once the higher time frame has completed its objective, so let's say the weekly candle, once we take out the weekly low, that's the weekly objective, right? You want to consider sitting on the sidelines, or you can trade intraday models, or lower time frame models. Lower time frame, intraday, they're basically the same thing. I just prefer saying lower time frame, but intraday, lower time frame, it's interchangeable. Yeah, that's actually pretty one of the bigger points, I guess, one of the bigger tips. This could be fractal as well. So let's say you're trading the 15-minute power of 3, right? And whenever we do take the 15-minute power of 3, you want to sit on the sidelines and see what we do from there. You don't want to chase that. You never want to be chasing prices. You want to be with prices. So let's say it already taken out the objective. You're not going to chase that move, because what's the next objective? You have to take time to formulate, more, a trade idea, and then you create that trade idea into an actual trade plan and an execution. And yeah, the fifth tip I have for you guys is, fair value gaps will take precedence over a order block. So let's say prices, there's this order block here, right? Let's say this up close candle is an order block. Sometimes prices isn't gonna actually retrace back inside the order block here and continue lower, but it can actually just retrace back inside the fair value gap and continue lower from there, because like I said, fair value gaps take precedent over fair value gaps take precedent over order blocks. And for me, this is a personal thing, but I always avoid trading the first 30 minutes of the market open. I feel like it's just that those first 30 minutes, it's very, volatile. People are really trying to make their money quick and go back to sleep or whatever they want. But I have avoided a lot of trades and losing trades just by avoiding the first 30 minutes, because like I said, as traders, you want to be in and out of the market. And you first get up, the market opens, you're like, oh, I gotta get this over within like 15 minutes, so I can start on my day. But this is the algorithm knows this, and it's gonna be like very awkward, just bad price action in general that first 30 minutes. So I tend to avoid it. And yeah, so here's another time that you should avoid trading is during NFP week. Avoid trading or just lower your risk on the Thursday and Friday of that week. ICT states this, that NFP week is a week that he actually lowers his risk or just avoids trading in general, because it's just lower probability environment. It's just the conditions aren't right, and that Thursday and Friday, it's very manipulative. So he just avoids it in general. It's not coming from me. This comes from ICT himself. So yeah, I usually just de-risk myself on that Thursday and Friday of the week on NFP week. And when trading ICT concepts, this isn't really a technical tip, but more of a technical. Actually, I don't even know how to describe this, but you want to limit your entry pattern to one PD array. So let's say your PD array of choice is an order block. Formulate all your trades and entries off an order block. You don't want to be entering off of every single breaker block, every single order block, every single fair value gap, every single mitigation block. He gives us a lot of PD arrays, and he doesn't say for you to use every single PD array, but you should choose your own, that one specific one and have it as your, one and only. One trick it. You want to be a one trick pony in trading. Being a one trick pony just means that you're, a master at that one PD array. And personally, the PD array of choice that I use is fair value gaps. That's my entry pattern, but like I said, I'm still taking note what this power of 3 is looking like, what this if we're coming into a new day opening gap. It's not like I disregard all other PD arrays. It's just whenever I actually execute and enter a trade, I'm only looking for a fair value gap to take my trades off of. This allows for cleaner setups and will prevent a lot of forced trades, because like I said, there's times when you can be actually delusional and you just really want to get into a trade, and let's say a fair value gap isn't present but an order block is, and you're like, oh, the reason why I'm going to get into this trade is because of an order block. But the very next trade, let's say you see another thing, you're like just really forcing your will onto the markets. You're like, oh, I want it to go lower, I'm going to see it, I'm betting it's going to go lower, I'm going to bet the house on this. And your previous trade, you're enter off of a order block, but this one you're taking it off of a fair value gap because an order block isn't present. Do you get the gist of what I'm trying to say here? It's just you don't want to force any trades, and you don't want to be taking too much trades. It really cuts off all the bad corners and really makes a complete plan. My last tip for you guys is that you don't want to enter a position right at any red folder news release, or there are some red folder news release that isn't actually like, it doesn't create prices to do like like a really big move up or big move down, but CPI, FOMC, PPI, there are certain news release that you should not be inside a trade. Let's say you're in the trade at 7 or 8:27, right? 8:27 a.m. EST time, Eastern time, and it's CPI today. So CPI is getting released in about 3 minutes. You want to close that trade, I would say, like in maybe a minute to 2 minutes, because CPI news, if you guys just backtest, it's literally it's like a big move in one direction, at least maybe 50 points, even more, sometimes even 100 points. Recently it's been even more than just 100, but yeah, you never want to enter a position right at a red folder news release. You should always wait for it to kind of die down, the volatility to die down, and then you take your entry if your objective is still there. But let's say your objective gets taken, right? You're not gonna, this goes back to the other tip, but you don't want to chase that. But yeah, and the only time that you can consider not taking off your positions is if you already have your risk mitigated. So let's say your objective has already been taken before the 8:30 a.m. even opens, right? And you already moved your stop loss to break even. then you have a carefree trade. Basically, you've already taken your partials, and even if prices comes back to stop you out, then you're okay. But like I said, CPI, PPI, sometimes your fill can actually get altered because of how big the move is. So just beware. And with that, that's gonna be all for my tips video today. I know I'll be releasing another tips part 2 soon. It's just I feel like you can have so many. There's a lot of tips into trading just to make it a little bit easier to grasp. But yeah, that's gonna be all for the video today, and I'll catch you guys later in the next one. Peace out. Bam.